Hello there, it's Lucy Forex, and I'm here to show you technical analysis, trading. Now we're just gonna dive straight into it. So I just want you to watch me and observe as I find a good play. Okay, so just a second. All right, so now I'm going to demonstrate to you my strategy and how I'm going to go. I'm going to guide you. So this is what's going to happen. Okay, I'm going to show you exactly my process and what I'm going to do. Okay, so this is exactly what's going to happen. So in the demonstration, the first thing I'm going to do is find a reversal pattern on the daily chart, look for a 4-hour entry, then enter a limit order. Okay, enter a limit order. Now ideally these are the patterns I'm going to be looking for. So if it's a bullish okay, let's do this. Right, so if it is a bullish pattern, I'm going to look for a candlestick entry that looks like this. This is called the bullish harami. So I'm going to look for something like this or something like this. This is called the bullish engulfing, or I'm going to look for something like this. This is called the rising three soldiers, or I'm going to look for something like this. This is called the morning star. Okay, or I'm going to look for something like this. So this this is called the long lower shadow. Okay, now I know it's a little bit, you know, there's a lot to digest, right? So I'm going to look for something like this, or like this, or like this, or something like this, or something like that. So this right here, let's use black now. So this one right here, this is called the bullish harami. This one here is called the bullish engulfing. This one here is called the rising three soldiers. This one here is called the morning star. and this one is called the long lower shadow. So these are what I'm going to use for the 4-hour entry. Okay, so for the 4-hour entry, I'm going to use candlestick patterns. So these are bullish patterns. All right, so if you want to learn more, I would encourage you to read Steve Nissen's book on Japanese candlestick patterns. That's where you will learn more about Japanese candlestick patterns. So for the 4-hour entry, I'm going to look for something similar. If it's not bullish, then it will be bearish. So a bearish pattern is basically opposite. So I'm not going to talk about the bearish pattern because that will take too much time. If I find a bearish pattern, then I'm going to come back here and show you how a bearish pattern looks like. Okay, so let me do this. All right, so I showed you exactly what I'm gonna do in a nutshell. So remember, the first thing, we're going to find a reversal daily chart pattern. So basically, we're just looking at technical analysis. All right, so basically that's what I am trying to show you. All right, I'm just basically trying to show you technical analysis and how I do it. So you are witnessing technical analysis. You know, there's so much to look out for and so much to keep up, and there's so many, you know, ways to like mix it up. um, you know, so I'm trying to find a pattern that can work. Because obviously there is long-term trading strategies and short-term trading strategies. So for me, I think it's just about finding that balance, you know. um, so we're going to literally just break it down and try to see exactly what's happening and why they're happening. All right, so now there are two school of thoughts here, right? Like for example, we're looking at this one here. We have a reversal on the week, right, and then a breakout on the day. Now, and this breakout is confirmed by falling three soldiers, which we are seeing right here. That's the breakout on the day with a reversal pattern on the week. So we have this one right here. Now I'm going to go to the 4-hour chart and look for an entry. So on the 4-hour entry, we can see a bearish engulfing pattern. Let me see if we have it right here. Okay, so we see a bearish engulfing pattern here. Okay, so for me, I think this is a good, I think this is a good strategy. Reason being, it has been confirmed. Let me see what we have here. Okay. We have a bearish engulfing pattern right here. Obviously, there is some volatility here to consider. It is interesting. So this one is definitely a good entry. So I'm going to sell that as a bullish engulfing. Now let me see, because I love clear entries. So let's digest exactly what happened on this chart pattern here. So the first thing we will note, okay, the first thing we'll notice here is it had a reversal on the week, and then on the day you can see it had that sell right there on the day. 50-day moving average crossed the 200-day moving average. Then if we look at the 4-hour chart, let me see. All right, 50-day moving average. Okay, awesome. So if we look at from the 4-hour chart, it gave us an entry signal right there. Okay, so it gave us an entry signal. So the entry signal was the bearish engulfing, and then we're going to review that just now. Let's see if I can do this. So we're actually going to review this entry after I'm done with these at the top. We're going to review the entry. Okay, this is very, very important. We're going to review the entry, because what I want is a precise entry signal, and I want that entry signal to be backed by my technical analysis. So I want an entry signal. Now obviously there are other strategies or ways to employ because what we're doing right now is we're looking for how to trade the short term. Obviously we're looking for how to trade the short term entry. So that's very, very important to note. Okay, also I'm not just looking for any ordinary short-term entry signal. So we have another one here. Okay, so let's digest it. Let's make sure the moving averages are correct. Okay, so the moving averages don't seem to be correct. Let me see. Let me use mine. This is crazy. Okay. Alright, so we have an entry here. Let me do this. Okay, I think this is a good entry. And again, we're going to review these entries together. I'm going to try my best to explain to you exactly what's happening, and we're going to review the entries together. Let's see what we have here. Okay. Okay. Okay, so we're going to review these entries that we have here. Let me just save. Just a second. Alright, now that I've saved the images, I'm going to try my best to explain to you why I feel these are good entries. Okay, I'm going to try my best. By the way, this is on a Monday morning, which is obviously the best time to enter these trades. So I'm going to try my best to explain to you why I feel these are good entries. Okay, now there are two school of thoughts. Okay, there are two school of thoughts. Let me see what you have here. Okay. So there are two. All right, now there are two school of thoughts when it comes to trading. Okay, so now I think I can bring this here to try and explain to you exactly what's happening. So I'm going to try and explain to you what's happening here. Okay, all right, so there are two school of thoughts. All right, so the first thing that we have here is, okay, we have the price. Okay, this is the price. Now in the reversal, all right, there's something called the RSI. Okay, so the RSI has three levels like this. Okay, the RSI has three levels. Now on those three levels, Okay, we have, we'll say, we'll put this as the daily pattern, we'll put this as the weekly pattern. So there are two schools of thoughts. Now the first school of thought is there has to be a divergence on the oversold bot, right? So basically, let's do this. I don't know if we can, if it will work. We have 80 here. We have 20 here, and then we have 50 here. Okay, so we have two school of thoughts right now. The first one is there should be a, what's that? There should be a divergence on the daily pattern, and then the buy signal from there, and then another divergence here, right? So now that's the first school of thought. Okay, now if we look at this one here, let's look at the daily pattern. It crossed right there, and then it crossed at the top. So that's school of thought number one. Okay, that's exactly what happened here. So we had a divergence on the daily pattern and a divergence here. Sometimes the divergence can happen right here, right? And I saw this, to be fair with you, to be honest with you, I saw this on the week, all right? So let me see what we have here. So sometimes it happens okay, let's see. There. Okay, all right, sorry about that, guys. So sometimes it will happen right here. Okay, sometimes it will happen like somewhere in that range, and this is exactly what happened with let me put it here, it's easier to navigate. And this is exactly what happened with this one here, right? So on the weekly chart pattern, on the reversal, right, it happened right here on the weekly chart pattern, and then it happened right here on the daily chart pattern. So it's a day. That's the first school of thought. Okay, let me see if I can save this, or if I can copy. Just a second. All right, so that's the first school of thought, right? And this is what happened with this currency pair here. Okay, this is what happened with this currency pair. Now the second school of thought is this one. Okay, honestly I think it's the same, right? It kind of looks the same. Let me see what you have here. Okay, All right. The second uh, I don't know if we could use the same. All right, fine. I'll just draw it again. The second school of thought. Let's do this. Okay, this is the price. Now this is the second school of thought. Okay, so in the second school of thought, what happened was this. Okay, now I know it's a little bit confusing. You're like, what the hell? Now, ideally, what was supposed to be the correct one was like this. Okay. Or it was supposed to be oversold here, right? And then overbought at that zone. Ideally, that's what's supposed to happen. But in this case, what's winning in both cases? Okay, in both. In both cases, the weekly chart pattern is the leading indicator. Right now, ideally what was supposed to happen here, ideally the week was supposed to be the leader here. Okay, let me show you what this is. Ideally what was supposed to happen is this was supposed to be like that. Okay, and then maybe it should have been, you know, ideally this is how it was supposed to be. Okay, ideally, but instead what we had was a breakout on the week. So this was a weekly. So in this case, I know this may be a little bit confusing, but just try to bear with me. This is a weekly breakout. Okay, this is a weekly. Let's change the color. This is a weekly reversal. Okay, so that's what we are having here. Okay, that's exactly what we are having here. So this is for NZD CAD, Okay. So uh, just a second. Okay, so that's the school of thought, right? So I want you to focus mainly on the weekly chart pattern. This represents the price, right? So the first school of thought is called the weekly reversal, which is what's happened here, or the weekly breakout, which is what's happened here. So on the weekly breakout, the reversal is on the day. All right, so the reversal on the weekly breakout, the reversal is on the day. On the weekly breakout, sorry, the reversal is on the day. Okay, and then I think, wait a second, I think there's a reversal on both days, huh? But what happened with this one was it could have appeared here, but then it appeared here. Okay, let me show you what I mean. So on this one, the breakout appeared here, you see. So I saw this on the weekend, but this is how the market closed. So what happened here was okay, let's see if we can do this. Okay, so this is what happened here. So on the weekly reversal, the breakout was on the daily pattern. On the weekly breakout, the reversal was here. Okay, so on the weekly breakout, you had a daily reversal. On the weekly reversal, you had a daily breakout. So these are the school of thoughts, and it's difficult to explain it because both schools of thought have happened in the opposite direction. It would have been ideal to see the weekly reversal on a bullish pattern, right? If this was here, the breakout would have been somewhere here. And then if this was here, this would have been, if this X appeared here on the breakout, okay, most likely the daily would have shown like a similar reversal. So basically there are two schools of thoughts. The first school of thought is the reversal, and the second is the breakout pattern, which has happened in 4 hours. So after 4 hours, okay, this is a 4-hour candlestick chart pattern. It started at 01 and it is 04. Let me see. Okay, let's use Johannesburg. Okay, so very important to change your time, the time zone here. 03. All right, 3, 4, 5, 6. So this chart, this buy signal is valid only for the next 15 minutes from the time you're watching this video. This is 0644. So at 07 hours, this signal will be invalid. So it's only valid for the next 15 minutes. Okay, so within the next 15 minutes, the signal will be invalid. Okay, so within the next 15 minutes, the signal will be invalid. So this is exactly what happened. Okay, so in the next 15 minutes, the buy signal will be invalid, and you would have missed the position. That's why it is important that you are here watching me trade it live. Now I'm going to give you another example in the stock market. So this is another example. Now the good thing about this example is that the market has closed, so you can kind of see what's happening. It's called Marriott Hotel. Now let's look at the school of thought in the Marriott Hotel example. All right, so in the Marriott Hotel example, we have a weekly reversal. Okay, a weekly reversal. Which is the weekly reversal? This one here. Okay, okay, so we're going to look at it. The Marriott Hotel. Okay, again, this is the price. These are the levels. Okay, so now okay, we have the daily pattern here, we have the weekly pattern here. So now in this example, we have a reversal right here on the daily chart pattern, which you can see right here. Okay, and then we have a reversal, sorry, on the weekly chart pattern and on the daily chart pattern. So it's very similar to kinda what happened here, very similar. Okay, we have a weekly breakout, right? Very similar to what happened to, right? This one is more accurate, except that this one, it was more in range. It appeared somewhere here. So we had a weekly breakout chart pattern on Marriott Hotel. Okay, so that's the Marriott Hotel. This is exactly what's happening. That's what happened. That's what's happening here. Now again, remember the entry was the bullish engulfing, and I think we looked at entries. Let me see if I took a photo of that. I shouldn't have closed the window. I shouldn't have closed the window. But this is what you have, right? So this is the bullish engulfing pattern, this one right here. This is what you are seeing here, the bullish engulfing, this one here. Okay, the bullish engulfing. As for this one, you're looking at the bearish engulfing, which is the opposite. So maybe let me just all right, so I've just created another one so it's easier for you to understand. So the patterns that we are seeing, there are two. So there is this one here. This is called the bullish engulfing, and then there is this one here. This is called the that's the bearish engulfing. This is the bullish engulfing. BE, if I got that correct. Okay. So this is the bearish engulfing chart pattern right here. I think let's use brown. So this is the bearish engulfing chart pattern, and then this is the bullish engulfing chart pattern. Okay, so it's that's how it is anyway. Okay, trying to rub this out. Okay, let's do that. Okay, so this is what we have here. So this is the bearish engulfing chart pattern right here. This is the bearish engulfing, this is the bullish engulfing, and these are the chart patterns you're seeing here, only valid for the next 7 minutes. So in the next 7 minutes they will not be valid anymore. We're using let me just close this position. So I think we can create another. Let's just reset. No, let me not reset this one. Let's create another account. Let's see what we have here. Okay, let's reset this account. Okay, let's reset this account. So it's only valid for the next 6 minutes. So we're going to start with maybe $100 at 50x margin, and then another $100 right here, at 50x margin. So this is what you have in the marketplace, usually 50x margin. So it's only valid for the next 6 minutes. After 6 minutes, then the signal will not be valid anymore, because remember, this is a 4-hour chart pattern. So this is exactly what's happening here. Okay, so a bullish engulfing. At the end of a given downward trend, there will be most likely a reversal pattern to distinguish the first day. This candlestick pattern uses a small body followed by a day where the candle body fully overtakes the body from the day before, and then closes it the trend's opposite direction. Although similar to outside reversal chart pattern, it is not essential for this pattern to completely overtake the range high to low, rather only the open and the close. All right, so basically now this is what they're saying. All right, so this is the bearish engulfing pattern, this is the bullish engulfing pattern. So on the journey, as you saw me, if you reverse this video backwards, you will notice that there were different chart patterns appearing, and it was so fast. But basically all I was looking for was a reversal pattern. So that's it for this video. I would love to thank you so much for watching. Trade safe out there. Don't buy what I tell you to buy, don't sell what I tell you to sell. Do your own research before you buy and sell anything. I hope you enjoyed how to day trade in technical analysis in the forex markets. Remember, understand risk management and profit taking strategies. That's my disclaimer. Don't buy what I tell you to buy, don't sell what I tell you to sell. Also, I'd love to thank my mentors, Robert Kiyosaki, who wrote the book Rich Dad Poor Dad, Tim Sykes, who wrote the foreword to the book The Penny Stock Course, and Matthew Greta, who wrote the book Rocket Stocks. Also, I'd love to thank Steve Nissen, who wrote the book Japanese Candlestick Chart Patterns. You can check out all these books on Amazon Kindle. Thank you again for watching. Take care. My name's Aldo Forex. Bye bye.